Yeah, so this is basically session 3. So we've done session 1, MS and breaker. We've also done session 2, which is decision points. So session 1 and session 2 should be at your fingertips by now. Yeah, so now right now we're going to do session 3, which is what we call PA. PA. So now earlier, what I told was what we call market structure. Let me just do a small reminder. So here we have what we call a downtrend. And you can notice we have the breakers. So that's a breaker, that's a breaker. And what I recommend, only look out for setups that are in line with the trend. Those are the best setups you can identify as you're trading. So now the breakers, then of course, you identify your decision points, right? You identify your decision points. So the best kind of setups should look like this. For a downtrend, then the same thing for an uptrend. Now, what we're going to learn today is what we call PA. So now PA is what we call price approach. Price approach, right? So now basically price approach gives us more information. So when you're considering a setup and it doesn't have price approach, you can become a bit hesitant. But when you see price approach, it gives you much more confirmation. Take for instance, what I've been explaining here. So look out for price approach along these areas here. How is price approaching your decision point? That is where we look out for price approach. Same thing here. That is where we look out for. That is where we look out for price approach. How is price approaching your decision point? Same thing here. That is where we look out for price approach along those areas there. So you've identified the structure, it's a downtrend. You've identified your breaker, and now you're waiting to see how price will approach your decision point. And that is how you can confirm some of your entries using what we call price approach. So now price approach, you basically have three main concepts that we're going to look out for. We have what we call the CP. We have what we call the 3D, and we have what we call LQ. So now CP is what we call compression. 3D is what we call the 3 drive. And LQ is what we call liquidity. So I'm just going to explain each of them as quick as possible. So as price is approaching your decision point, these are the three kind of structures that you have to look out for: the compression, the 3 drive, or liquidity. These are three structures that you should look out for when you're waiting for price approach. As price is approaching your decision point, as price is approaching your decision point, as price is approaching your decision point. Yeah, so I think that's a good introduction. Now, let me jump straight to what we call what we call the compression, right? So now the compression is basically manipulation pattern used by the institutional traders. Well, let me just call them smart money, used by the smart money. Yeah, to trap traders, as a price approaches a decision point, right? A decision point. Yeah, so now whenever I see a compression, at the back of your mind, you should know that it's a manipulation pattern used by the smart money to trap traders as price approaches a decision point. So now, if we have a decision point right here, a decision point right there, right? That is our decision point. This is a rally base drop. So basically here we have unfilled, we have what we call unfilled sell orders along this zone here. I think I explained that under decision points. So now basically price won't, when price is moving, or when the smart money or the institutional traders are pushing price, they won't push price in an obvious direct move, right? This is so direct. So now what they will do, they will use what we call the compression. So now the compression, basically price will move randomly. It will move, it will push up, down, push up, down, push up, down in a random kind of movement. So now each time they are doing this, what they're basically doing, they are trapping impatient sell traders, right? If you're a sell trader and you're impatient, you'll be trapped within this compression. Because as a sell trader, you're supposed to wait for price to test your decision point. So now impatient traders, especially new retail traders, they'll want to sell along these areas here. They'll want to sell along these areas here, right? So each time they try to sell, price will be trapping them along this compression here until price reaches our decision point, then it will drop. So this is what we call the compression. That's what we call a compression. Very simple concept. And it happens a lot. I think for those who have been trading for some time, it happens very many times. And for those who have been trading patterns, this is what we call the rising wedge. I think you've heard about the rising wedge. Or sometimes it could be an ascending triangle, whatever. I don't do patterns, but this is how the concept comes about, right? Now we have what we call the 3D. The 3D. So now the 3D is what we call the 3 drive. The 3 drive. The second type of price approach that you should be looking out for. So now for the 3D, it's similar to the compression, but differs slightly. So now here we shall have a decision point. A decision point, right? That's our decision point. So along that decision point, we have unfilled sell orders. So now for the 3 drive, what we look out for are 3 touches. First drive, second drive, and then so now whenever you confirm the first drive, whenever you see the first drive, and second drive, automatically what you wait for is what we call the third touch. So we shall have 1, 2, 3. That is what we call the 3 drive, right? It's also very powerful confirmation kind of entry. So price will form a first drive, second drive, and then third drive, right? And usually the 3 drive and compression usually happen together. Most times they happen at the same time within the same setup. So that is what we call the 3 drive. So let me just get a few examples on compression and 3 drive. Then I think we shall conclude with LQ. LQ is what we call liquidity. Yeah, so I think the most recent example was when I haven't yet analyzed for the following week. So let me see. So now you can clearly see that we had an uptrend here. I think I shared this this setup in our first session. I imagine most of you took the trade. You can see how the trade moved. So we had our entry somewhere here. So you can see the pips that were collected. So price just rallied. So that's the beauty about following the trend. When you follow the trend, most of the time you bank good money if you follow the trend. Always look for setups in line with the trend. You make quite some good money. Okay, now, so here, as I said, we had a breaker. That was our breaker. Then after the breaker, we then had a decision point there. So after identifying the decision point, what you wait for is price approach. And now here you can see we had what we call a compression. I think you can see that compression there. That's a very powerful compression. You can see it clearly, the random movement of price. That is a typical compression, manipulation at its finest. So this is what we call the compression. CP, I'll denote it as a CP. Whenever I see a CP, prepare yourself for action. So same thing here, you can see we had a decision point, right? I think the decision point that was considered was this one here. So we had something down there. And now you can see how price approached. So price approached our decision point and then a reverse. That is also compression. So the compression happens quite often, especially if the market is trending. If you can look out for a trending market, you can capitalize on compressions. And also the compression is very powerful if you're trading fundamentals. We shall cover that in our final session under fundamentals. So now notice here, we have a decision point. We have a decision point. I think I shared this trade in the group. So you can see that is a compression. That is a very powerful compression. So I think here we have a compression and a 3 drive. So, because I say that the compression and 3 drive usually occur hand in hand. So you can see there we had the first drive, second drive, and then third drive. So here we have a compression and a 3 drive at the same time. Very powerful. These are very powerful concepts. Very powerful. Let me see. Gold. I I don't know, most of you who traded gold. So now for gold was just obvious, right? I don't know. This happened, I think, on Wednesday. So you can see now here we had a decision point right there. A decision point right there. So now notice here we had what we call a compression. And then I think we also had a 3 drive, first drive, second drive, then third drive. So this was a very good example of a price approach. So how is price approaching your decision point, right? If you see any of those structures, then it gives you stronger confirmation, right? It gives you stronger confirmation. So I think that is a 3 drive and compression that occurred. Let me see if I can get more examples. I just want this concept to stick to your head. Price approach. Let me see. I think it was on CAD JPY. Yeah, CAD JPY. We had a compression here, a very beautiful one. Yeah, so you can see we had a decision point right in there. It was a tight decision point. The sniper, then it's over the sniper entry. So but now look at the 3 drive, first drive, second drive, third drive. Look at that price approach. So these are the things that give you confirmation. And now for the 3 drive actually helps you pinpoint a decision point, because usually the third drive coincides with a decision point that you will consider. Yeah, so this is what we call a 3 drive. Very powerful price approach. 3 drive right there. I use a price approach quite often. And I think the most recent setup is on AU. Yeah, for those who are looking at AU. So now you can see here we have a decision point that has been filled. But now the bigger picture is the 3 drive. Now notice we have the first touch, second touch, then the third touch. That is a very powerful confirmation under price approach. So you can see price from the first touch, second touch, and then the third touch. Yeah, that is basically compression and the 3 drive. Yeah, so I think I've explained this elaborately. Now let me just conclude with the final kind of price approach that we should look out for. So it's what we call the what? LQ. LQ is what we call liquidity. Now let me just elaborate on this. So now liquidity is basically composed of retail stop losses, right? So now basically each time stop loss levels are entered, it accumulates what we call liquidity, right? And that is what the smart money are interested in. So, and the smart money usually move price towards liquidity, right? So what drives price? It's liquidity. So now the smart money, basically, they'll push price to levels where there's a lot of liquidity. And the liquidity is composed of retail stop losses. So now these are concepts that are you should have at the back of your mind. And now for you to be able to identify liquidity areas, look out for what we call eco highs, or what we call eco lows, right? So now eco highs, basically, you look out for resistance levels, and then eco lows, look out for what we call support levels, right? Those are levels that have lots of liquidity, retail stop losses, right? Now, let me just explain that in a moment. So let me say we have a zone there, a beautiful zone. So now along that zone there, we have what we call unfilled sale orders. So now basically price will push up and form what we call a resistance level. It will then drop. So now each time price drops, now by default, we are told that to sell at a resistance. So now meaning by default, above this resistance level, we shall have what we call stop loss levels, right? Stop loss levels of sell traders right above there, right? Then again, price will probably rally, respect that resistance level. So now each time it respects that resistance level, it's basically accumulating liquidity right above. Each time it respects the level, it's just accumulating liquidity from sell traders who are selling at resistance. So now along this area here, we have tons of sell traders and their stop loss levels are just above. So now meaning right above here, we have what we call a liquidity, right? We have liquidity. And as I said, the liquidity is basically composed of retail stop losses. So now what price will do after luring in these traders, they'll just push price up, take out all this liquidity, and then drop. That is how the concept of, okay, basically that's how I approach the concept of liquidity when I'm analyzing the markets. It's a very powerful concept. It doesn't happen so often, but if you're able to identify it, then you'll be able to make a better decisions. Yeah, so the same concept also applies for buy trades. So basically, you look out for a demand zone, right? A demand zone will form. Then if you notice eco lows, at least two along this area here, at the back of your mind, you'll know that we have what we call liquidity right below there. So price will basically take out that liquidity and then continue in its initial direction or in the direction of the trend. So that is it regarding liquidity. Very powerful concept. Okay, let me just get a few examples, then I wrap it up. Let me see. As I said, it doesn't happen all the time, but if you're able to pinpoint it, then good for you. Now, first example is on EU. I think this happened a few months back. So now notice here we had what we call we had eco highs, right? So we had a significant level here, meaning right above there we had what we call liquidity, right? We had what we call liquidity right above this area here, right? because you can see price was forming equal highs. So we have a significant resistance level here. So now right above that level, we have what we call a decision point. Notice that decision point, right? So you can see what happened. So price basically accumulated the liquidity and then took it out. It took out that liquidity and then dropped. That is what we call the fake out. What we call the fake out zone. So price will just push up, take out the liquidity, and then proceed in the direction of the trend. It traps quite a lot of support and resistance traders. So you have to be on the watch out. Let me see. I don't know if we had an example here. Let me just verify. Yeah, now the concept of liquidity, especially if you're looking out for those significant, very significant levels. Take for instance here, this one was significant right there, right there. Yeah, and you can see now, meaning right above this level, we had liquidity. So you can see price then pushed up, took out the liquidity and then dropped. So meaning right here, we had what we call liquidity. Liquidity right there. Very powerful concept. Very powerful concept. I don't know what to conclude with, but basically we're done with this session. This session is basically about, it's more of a price approach is the summary of today's session. Let me see. Yeah, I think we have one here. Significant level. Significant level. Yeah, there I can see we had equal highs and then price then reacted to fill the orders right at that decision point to the left. Yeah, very powerful. And I think you can see the compression. And now something I just want to note out is if price is compressing and you have liquidity, it becomes what we call CPLQ, right? CPLQ. Now, CPLQ stands for compression towards liquidity. So now price is basically compressing towards a liquidity area, right? A liquidity area. So that is why if someone writes a CPLQ, it's basically meaning price is compressing towards liquidity. And you can see how it took out the liquidity and then dropped massively. It was a very, very massive drop, very massive. Yeah, so that is it for today. Let me see. The setups that I've shared for January, let me see. Most of them, you can see, this was the first setup I shared on the 1st of January 2022, as you can see down there on your bottom left. Now you can notice I identified a breaker, price broke structure. And then what I had to wait for is what we call price approach. You can see price started to approach, right? And now as it was approaching, right above, we had what we call a liquidity area. And sometimes you can denote a liquidity with the dollar sign. The dollar sign means a liquidity area. So now, so I anticipated price would take out that liquidity and then a drop. So as you can see, odd card, I think most people made money on this setup. We made quite a lot of money on this setup here. It was one of the big trades of the month, very big trades. You can see how price played out. Same setup. You can see. So we had the breaker. After the breaker, the compression, and as price was compressing, it formed a liquidity area right above there. So we had some liquidity there. Some liquidity there. So you can now see how price triggered our decision point. It triggered a decision point, and then boom, it dropped in massive profit. Look at all that, very powerful. It's a fast setup I shared in January. Let me see more setups that I could have shared. I think this one it didn't trigger. You can notice price was compressing towards the liquidity. I think this one missed by a few pips. This one triggered in profit. You can notice we had liquidity right above there. US dollar CHF, this one is now in massive profit. I don't know. US dollar CHF. I shared this one still on the 1st of on the 1st of January. So you can notice right below here, I noticed a significant support level. So meaning we had liquidity. So price basically dropped, triggered, and then went in massive profit. Let me see if I can recap that. Where is it? US dollar CHF. Let me go to H4. Now look at this. Very powerful. So now what I did, I noticed a significant what? A significant level. So now meaning right below that level, we had what we call liquidity. And now notice price then went for our decision point right below there. And it was a massive sniper entry. Sniper entry. Yeah, by now we liquidated our profits. So you can see our price just went in deep profit. Deep profit. It was a massive trade. Let me see. Yeah, this was the setup. I'm just trying to recap a few trades that, yeah, this one went in profit. It triggered our decision point. You can notice I identified a liquidity. Yeah, this one went in profit. For those, you can check your NZD-CHF. I shared this on the 1st of January also. These were swing trades because I analyzed them based on H4. You can notice a liquidity area, then price took out the liquidity, and then woof, it dropped massively. I think, let me stop with this example because we can just go on and on and on and on. These are the concepts that we trade. There's nothing really complex. This also went in profit. Let me recap on NZD-JPY. NZD-JPY. Yeah, you can see the setup that played out. So you can notice here I identified some sort of equal highs. They don't have to be very perfect. And then we had a compression. And then now we had a decision point right there. So you can see our price triggered and then dropped in massive profit. Yeah, so I think that is it for today. So under session 3, we've done price approach. So I've covered what we call the compression, the 3 drive, and liquidity. So now price approach basically gives us more confirmation when now we're looking out to place our entries at our decision points. Yeah, let me call it a session. Thanks for sticking by. If you've loved the session, you can comment in the chat section, and then I think I can wrap it up from here. Thanks for sticking by. Yeah, perfect. Perfect. Let me end it here.